Hello, good morning, everyone, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. I almost messed that up. Hey, listen. So real quickly, let me throw this up. My VIP membership starts, mentorship starts in 2 days. We're gonna start on Wednesday. I have 2 slots left available. If you're interested, there's my email, dmiller at prometheaninvesting.com. Learn how to structure your investment process, meaning the 3 pillars of any investment process. So, any investment guidebook, rule book, whatever you call it, your rules for investing, which is risk management, cash management, and investment management. Also, learn through my system, which is identifying institutional cash flow, trading activity, and whether that lets you know that they're buying or selling, how to identify tops, how to identify bottoms, how to know if you're heading into like the Titanic versus a correction, how to make sure that you have money available to buy the dips when there are dips, how to know when you should be going short, if in fact you go short. We go over plenty of my mentorship. That starts in 2 days. There's my email address. You can also go to prometheaninvesting.com and reach out to me through the contact page. If you are on Twitter right now, you can see my mentorship program costs and how to sign up. If not, just feel free to shoot me an email. I'll get into that a bit more. So, what we are going to cover today is I'm going to go through some updates. So, as you know, I have plenty of positions that have hit their target price and target date. I have one AMD that missed both the target price and the target date. So, we're going to go back. We're going to review that, see what we see coming, and then we're going to go through and we're just going to review a bunch of positions that we hit accurately, and let's see where they're headed next. And if you're interested in seeing any particular position on the show, having me review it, just let me know in the comments, and I'm happy to review anything you'd like to see. Like, I'm here to teach. I want for yourselves. Some of that, obviously, I've years, so the guidance of my one-on-one sessions, which is what I are the best possible, because I get to know you very well, and that allows me to help you set up your guidebook, whatever you want to call it, your investment process, and the rules that you adhere to. You should always know exactly when you're getting into it. And when bad news comes up down in a major way, you should know exactly what you're going to do. When others are excited, should you be? You'll know how to identify these things. So I always lean towards the one-on-one, but you know, the mentorship program is amazing as well. Absolutely amazing. It's 16 sessions. We do 2 sessions a week for 8 weeks. So you have that as well. All right. So let's get started. I'm going to pull down my email here. And let me see what we're going to start with. You're going to see me look down because I am going to look over the things that I said I wanted to go over. So American Express. American Express, actually, the target was for the 27th, was tomorrow, 252. And I think we're sitting at like 254 now. Actually, you know what? Let's review the NASDAQ right now. Let's jump into the NASDAQ, because the NASDAQ is our leading index in this market run, with the leading industry being AI, which I'm going to cover tomorrow. But let's take a look at that index and let's see if it's showing strength or weakness. I am going to share my screen with you here. Let's see if the NASDAQ is telling us, hey, you need to be excited right now. So on a monthly chart, is it telling us that? Well, volume this month, which has a full week to go, is almost at the same volume as last month, which is up from the previous 2 months. Coming into fall, that is not a surprise. It looks like price dipped way down, as we know, from, was it 3 weeks ago now? 3 weeks ago, Monday, when the NASDAQ opened up down 5.5%. It was the 5th, right? Yeah, 3 weeks ago. So anyway, price dipped down. We've done nothing but rally since. So that weekly chart looks really good. Nothing outstanding in volume, but we're heading into fall. We're not in fall. Last week, volume dropped. We have yet to see how this week is. And last week, if you look at, it's still buying. It still looks like buying on the week. Let's zoom into the day. We're not going to spend a ton of time on the index because we are in an uptrend. We do have a gap sitting right here that we would expect to fill, and that is at a price point of 490. All right, which I believe I have a target at 490 for the 1st or 2nd of September, something like that, so we can see if that target looks like it's going to hold. As of definitely does. But if you have any follow any rules whatsoever you do, we hit a high of 485, 486 already. So if you were playing this position as a short-term position, I certainly hope you've made some adjustments, raised some cash, decrease that position size. If you haven't and you're not sure why you should have, perfect time to jump into my mentorship course. Reach out to me via my email, dmiller@prometheaninvesting.com, or head over to prometheaninvesting.com and simply fill out on my contact page, or head over to my Twitter, and you can sign up directly there or reach out to me there. I'm also on LinkedIn and Facebook and all that as well. Let's see here. So let's zoom into a 4-hour. What's it look like on the short term? On the short term, what do we see? Well, I mean, the thing that pokes me in the eye is this right here. And you would expect this gap to fill before the run up. You certainly would expect it to fill. So we have a gap there, which has a price down there of 465, right? So would it be wild for us to head to 465? Absolutely not. We're on a 4-hour chart, so I'm not going to add any outlook there, any forecast there, any target price or anything like that. There it is. I mean, okay, I would say we head there first. Let's zoom in a bit more. Remember that every chart is independent of itself. Oops, this should be a 30-minute. Every chart is independent of itself. I am merely looking at this picture as an independent picture. Every time that I zoom in, now we get down to a 15-minute chart. Let's see, and there is that gap. Okay, we see some high volume here, there, and then there's a gap up. That gap has filled. Now you have high volume up here yet again. So you're going to assume this is short-term selling to fill this gap right there. I would say we should see this. Let's get rid of that. Let's zoom into a 5. This gap has filled on a 5. You know, look, I would we have 2 targets sitting. I mean, we're collared, right? If for all of you traders or options guys out there, we have a collar going right now. Basically, in the shorter term, we can see that we should head down to this 465. In the longer term, we should be heading up to that 490. Now, remember something here does not mean, let me review this, does not mean, show up in a minute, that 490 above us, let's see number. No, it doesn't look like it does. Oh, go out to a 4-hour. No, here it is right here. So, 4 heck of a close touch right there. But it's right here. So that doesn't mean you can't head here first. Does it look like that? So let's just throw this here. You know, there's a very easy way. And actually, I love these. For me, I truly enjoy positions like this because your risk is staring at the face. There's nothing here that is going to trick you, right? So you're at 465. And these are the 2 areas you're playing within right here. So you have an upside target right there. And you have a downside target. It appears as though the downside target will be met first. But either way, you should know how to play this, because if you have a short and a long position now, if you're playing this in a neutral manner, which is always the best way to alleviate risk, is to keep yourself in a neutral position. So right now, I mean, I don't know which way you would be. I would definitely be on the long side, looking to go long. If that is the case, let me save this here. If that is the case right now, you're playing to the short side on the short term. So you can either be going short or you can be waiting to pick up more shares. So that's really what you're looking at right now. You say, okay, so if you're someone who plays short and long, which I am, and I think anybody who's intelligent is, because you can alleviate risk that way. Let's just say it goes up first. So you're to the long side because you've been waiting for 490 since 3 weeks ago, right? So right now, say at 486, you cut this position in half. I hope you cut it in half a lot more than that, within 1% of your target price. When you had a 20% run up and you're now within 1% of your target price, you should have pretty much had that long position reduced down to nothing. In any case, so you either played it short here, or even now, if you say, look, I'm playing it short for the next 5 days, short, close your short, long. Now, you know the old saying, right? Bulls make money, bears make money, pigs. Something to simply we're raising this run up, probably starting somewhere around 475. You were raising cash through 485. Increase that position, that buy side position again, right? That's what you would be doing right now. And for some of you, that's not at all what you would be doing, because you play faster and closer than that. And for some of you right now, you wouldn't be doing anything because you don't care about 10 points, which is about 2.5% on the NASDAQ. That means nothing to you. So it all depends where your risk tolerance is, who you are, and how you trade, and what your rules are, right? But anyway, that's a short-term forecast for the NASDAQ. Let's jump in now. We're gonna take a look at American Express. I know I had that for tomorrow at 252. I think we hit 254. It's at 255 now. On a monthly chart, how's it look? Yeah, you're right. Amazing. It's breaking out in price. Nothing substantial there in volume. Here's the high prices. So you want to, you know, are you adding to long positions here? I certainly hope not. Because the fact of the matter is, you've been sitting at these prices for quite a while. This is a small gap that filled finally this morning. And I was talking about that last week, which is how we got this position where I was calling for 252, because that's where that gap right there lies. I can zoom in for you. For any of you that didn't happen to see this gap right here was why 252 was in the cards. I had it for tomorrow. It made it there today. Great. We don't ever care if it's early, right? Early's just fine. So now you want to say to yourself, okay, does it continue running up? Well, you have some resistance here, and you also have markets, at least today, right now. They're not very strong. Let me go back. What's the S&P doing at the moment? I just want to see. Remember, you always want to look at your underlying indexes when you're looking at positions. Down 20 basis points. There's a gap down here. There's a gap down here. I mean, look, there's weakness in the underlying indexes. There's gaps below you, and there's pressure on top of you. So you want to pay attention to that. I'm going to back just a little bit. Go back to a daily chart. All right, what do we see above us here? Well, nothing at the moment. This is certainly not a point at which you would be buying. Down here would have been a great spot to buy. This is when we were buying up the NASDAQ, right? So that would have been a great point to buy, but is now a great buy time. Let's zoom in a bit more and see what volume is doing as prices are being driven up. You know, you could potentially place a buy here just above that high, call it 256.25. The only problem is when you have a breakout, what happens to breakouts, everyone? When a price breaks out into a new high, it runs, and then it does what? It comes back, and it retests the area from which it broke out from, which would be right here. So you'll have a second chance to buy, and then you'll also you'll be removing the risk that this is a false breakout. What's a false breakout? Well, a false breakout is used by institutional investors, strong hands, big money, yada, 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 as a means to get retail to buy into a position because they know that retail looks at breakouts. They'll get them to look at a breakout, and then they'll buy into it. And then institutions, when it reaches a certain price, will sell off some of those shares to bring the price back down and see if there's more supply at that breakout. Now, I can show you something here that when it comes to American Express, it's not great. The fact that you had a breakout above this 200, it's great that it kept rolling and the volume looks good, but 200 hasn't really been revisited. Now, you can argue this low of 214. You could argue that maybe I have seen worse, and you have several points here, which is coming down, and it looks like it's searching for supply. So this fly is nuts. You could argue that it has returned down and that this is a strong move up. I don't play bull. If I see a bullish stock, you have to understand something. My first rule of thumb, and it should be everyone's rule of thumb, is I do not buck the trend. Okay, I don't just pile onto it either. Does that mean I would never tell you to buy here? In fact, to be fair, I wouldn't buy American Express until it returned to 200. I would not. Do I think it looks strong? Absolutely. Is it showing more strength? Yeah. And as I zoomed in, let's zoom in a little more. We zoomed into what? 4 hours? Let's zoom into an hour. We'll see it's filling the gaps. It's moving. It's very organized. It's very structured, this move, which that makes you feel good. 30, 15. But again, I wouldn't buy this. I'm a patient man. Let me tell you something about markets, everyone. If you don't know this already, patience is what makes you. All right. Now, if you ask me what I think of this, it looks like a false breakout. It looks like it will not break out to a new high. It looks like it will reverse. But I don't really have an updated price target on this. Do I think it looks good? Yes. Would I buy it? No. I'd wait for it to return to 200 at least. Or, and you look, there's no such, there is no FOMO, everybody. You know how many positions are out there? How many good positions with good price targets there are? I'm looking up our next position here, XBI Biotech. Okay. So for now, my opinion on this is that it looks strong, but it has not revisited its breakout price, which means I won't buy it. Let me show you something about breakout prices. See this? This is a breakout price. Up to this point, it had not revisited. Look. Boop. It revisited. Now, this is your new breakout price when it breaks out of there. Boop. It revisited. Now, let me show you what we're missing here. We're missing the revisit. We're missing the second chance, everybody. Look. All right. Have a second chance, everybody. And are you going to have a second chance here? I don't see why you. Don't you always have a second chance? Yep. Very rare you don't. Everybody gets FOMO because they don't realize that the market is designed to move. It's a business, everybody. I know everybody you have people on there calling it's gambling. It's gambling. This is a business, and a very well-structured business. And like any business, it has to flow in a manner that is you can forecast the flow to a degree. Otherwise, it's not going to be a very successful business. What company is going to be involved in a business that you have absolutely no idea where something's heading? Come on. Let's move on to biotech. Biotech, we had a target. Let's see, what was the target? We had a target of 95, and I think it was at 92 when it hit, which was what? We had a target of 95 for the second. So it was at the beginning of the month, and I think it hit 92. Let's zoom in. I know it hit 92. Let me clarify. Let's zoom in. Get out of here. Man, I am under attack from this fly. So what's this date here? August 5th. It hit 8. Oh my God. No, it didn't hit 80. What did it hit? What's the low? 91. Okay, it hit 91. I called for 95. Now here we are again. We are meeting resistance, right? There's resistance up here. But again, resistance doesn't mean anything. Life is all about life in the investor fast lane is all about cash flow and trading activity and whose cash flow it is and who is the active trader at the moment. If it's retail, that is not good. I can tell you now there's a sign here that is not good. This entire area, right? Let me show you something. Something that just pokes me right out in the eye is right here. This whole area is a lack of activity. It is a complete lack of activity. Look at that. Compared to what's in the background, I don't like that. I would definitely zoom in on that. And I'm going to right now because I told you we're going to go through some of our old forecasts, and we are going down to a 1. Zoom in, everybody. Zooming in. Okay, a lot of volume here. Gaps, filled. Anything else to look at? No, not so much. 30 minutes. No, we're not going to have any real update here. It hit that 91, 92 mark. I mean, 15. Is there any targets down there? I mean, you have a target down. You have a target at 96. I would say it's a reasonable target. It's really struggling up here. I'd give 96 a week from now. Right here. Go there. XPI. $826, 2024. Date. 8. Now it's gonna be 9, huh? Wait, I gotta look at dates here. It's gonna be, yeah, it's at least 9.2. We'll give it 9.4. What do we say the price is? 96. There you go. Rest my soul. I know I didn't bring music out today. I've been actually streaming live. Like live. A lot of times what I'll do is I'll just record these videos and then put them out. Not to edit anything. I don't do any editing. I don't care about that. I mean, there's nothing I'm going to do on here that I'm embarrassed that I've done. Okay, PayPal. PayPal took 5 additional days. So I had it 71. I had a target date at 8.9, and I think it took to 8.16 to get there. Let's pull up PayPal. $72.33. Let's go to weekly. Let's just see if there's an update here. Hold on 1 second. I'm going to do a time check. Oh, wow. Taking my time today, everybody. We might have to do more of this tomorrow. PayPal, that doesn't tell us anything because of this giant mountain behind us. Zoom in a bit more here. Okay, here we go. Now we do have a gap down here at 66. Yeah, what day did it make it? Right there. August 20th. Okay, let's zoom in a little bit more. 4 hour. Good. 1 hour. which it's not. This is a very efficient moving stock, by the way. This is what I mean by efficient. No price is being neglected. So when gaps fill, look at this gap down there. When gaps fill like this, look how long. I mean, everybody thought they missed out up here at what is that, 67? Came right back down to 58, 59, which it would because there's a giant gap there. There's a gap here, fill, fill, fill. This is moving really efficiently. So, you're not insane to go, hey, listen, it's going to return to what's this? 66. National opinion. I'm in and on what time frame we can see. Remember the time frame of your charts, which is this right here. Whoop. Yeah, let me move this. Boop, which is that right there. This time frame, 30 minutes, is how you're creating your target date. That's how you're creating that time frame as well. So when you're looking at a 30, you're looking out quite a bit. Let's go down to a 15. Still showing. Here it is right here. I'm talking about that gap, everybody. Here it is right here. That's your 66. It's on a 15. Yeah, I mean, we're heading into fall. A 15 usually is going to be 5 to 7 trading days, okay? But in slow times, which we're still technically in summer, everyone. We're not moving yet. I mean, we are, but it's not we're not moving all that quickly just yet. Here, I'll put this price target up. No problem. Because it is going to hit there. I'm going to give it 7 trading days, but I'll tell you, you're cutting it. I don't want to say that's a risky proposition, but in the summertime, which we are still technically, sometimes your 15-minute chart can really be used for 10 trading days, 10 to 13 trading days because of seasonality, because it slows down. We said 66. Let's do target date. What did I say earlier? Yeah, I mean, I'm going to go to the 3rd, I guess. Really, the 4th is probably where you should be. I'm going to take it to the 4th, actually. Yeah, 9-4. It's just we're not the activity, the trading activity at the moment just still isn't in a world that I'm like feeling. We're not at full capacity yet. That's for sure. We're certainly not at full speed yet, and I'm gonna add a little cushion, right? I'm gonna add a little cushion. In a couple of weeks, that 5-day forecast. There could be reasons that it may be a little longer or even shorter. So a 15-minute can simply be usually that's your 5 chart for your 2 to 3 day forecast, but it can be that. FCX. Oh yeah, I had a downside target of 40 and an upside target at 62. We hit our downside. So let's take a look at FCX. Yeah, it bounced off that 40 good, huh? Woo-hoo. All right. And this is quite the range we have going. I'm going to zoom in a little more. Well, we knew that. We talked about this on the original forecast, this range. All right. Now, listen, you have gaps below you. Look, this gap down here and this gap down here. Look how long they took to fill. So this position is moving quickly as well. Now, in the short term, this is where you start to say, hey, you have to weigh in the indexes, right? So in the short term, we're looking at this gap. Did we say that the S&P 500 and the Nasdaq look strong or weak? Right now, we said they look weak. We said they look heavy. And guess what? Guess what you have? And that plays a role, right? Because this thing's range bound. Now you have a gap down here. You might say, hey, that gap could take, a month to fill, 2 months to fill. Why? Because you have a gap up and you have follow through on price. And what's the rule when you have follow through on price? The rule is this will probably take a little longer to fill. Now, I understand that's the rule. But if we have weakness in the indexes, there's going to be downward pressure on the index. If there's downward pressure on the index, when you see a target like this, you would better take notice. Let's zoom in a little more. There's one sitting here too, which isn't much of a move. I mean, you're at 45, you're at 75 cents there on 45. So you're, 1.7%, 1.6% move down. Zoom in on a 30 here. But what I will tell you, yeah, you would be looking at this to the downside right now. And you would be looking, everything's coming up on a 15-minute. So I'm going to give this to the fourth yet again. We're going to put it down here at 42. Up here, we're doing 826, 2024. All right. We are looking at FCX. We'll do 42. Yeah, 42 is fine. 42. And then we're going to put a target. I'm going to do the fourth again. So we're on a 15-minute chart. And just remember something, that as volume and trading activity pick up, 9, 4. This can be sped up. Those dates are going to be sped up. I'm not exactly using summertime forecasting here. I'm kind of in a hybrid. I'm kind of using like a hybrid model as far as what the 15-minute chart should forecast, what the 5-minute should forecast, what the daily should forecast, because we are in an interim period. Kids are back in school for the most part. However, trading is not exactly in full swing just yet. So we're going to do that. Let's go on a monthly here. 1 month. There we go. Let's see. Where we at? Where we at on time? That's about 30. We're like 32, 33 minutes in. I can keep going. Should be told. I'll do one more. You know which one I want to do? I want to do AMD. We missed the target price, the target date. This one did not do what we expected. Now, let me take a look what we had here. On the 30th of July, we were expecting 174 in price by 816. And we're still sitting at 151. Let's zoom in on AMD. We just missed it. And it's easy to see how we missed. If you visit my Twitter, you had a downward price move, high volume from 174. And we were sitting, the price was down at 140. So price has risen since that forecast, but not nearly as much and not nearly as fast. And I'll tell you why. It was because it dipped even further, which I did not expect. And when you have, we're going to go to right now. Here's our 174. I'm going to zoom in a little more. I believe so. Yeah, it's your July 30th. Yep. I'm going to zoom in more on this. 4 hour. All right, here we go. So what happened was, here we sit. All right. And here's your 174 right there. And we were at 140. We are here. And what I was looking for was a simple rally back. But what happened was August 5th, right? So you can't fight the index. This thing was going to rally back. It got pulled down with the index. It actually made a low price of, what's the low here? 121.82. All right. Now here we are rallying back. Now the rally back, so far we've hit a high of 162. So still within $12 of my expectation. That was on August 20th. What was the date I said I had the 16th? I was calling for August 16th. So it didn't make it. You may have scaled out a little bit here. It didn't make price, and it didn't make date either. So it didn't make target price or target date. We're going to zoom in a little bit and see if we can't refine that target price and target date and see what it tells us. That's us up 175. We're on a 1 hour. Okay, so now it's out of view. We know it's there, right? We're like well aware that it's there. Let's see what we see on downside. Boom, boom, boom. There's nothing worth mentioning. So you're really, I mean, oh my, okay. So a search for supply, which looks like it was really, really successful. Yeah, but here's that gap. This was the gap that had to fill. Not filled. That was filled. It rallied and it pulled back. The reality is you're still aiming at 174 right now. I mean, on a 4-hour chart, does this show up in the 1 hour? You're looking out a few weeks, but you're still your price is still 174. Without a doubt. Your price is still 174. Now we're looking at a 1 hour chart. Yeah, you can be looking out 6 weeks here. You're probably looking out 6 weeks here. So 8/26/2024. You're doing AMD, which I blew it the first time. Didn't hit it. Hey, it happens. 174. Same price though. Same target. Time. Probably 10-1. We'll go 10. I'll do 10-10-4. Because I'm not going to look up the date right now. Where exactly is that? Here, let me pull all this stuff down. Put this here. It could happen much quicker than that. We are heading into fall. I'm just going off of how this particular stock has been moving. And with how this one has been moving, you're probably looking out 5 weeks. You're looking at the beginning of October. All right. There we go. All right. And I think I have some more to do, but I may just do them tomorrow and then hit AI on Wednesday. Go over the AI stuff on Wednesday. Yeah, I still have GRFS. I have NEE, Levi, ARM. I still have quite a bit I want to go over for solar. All right. I have quite a bit I do want to go over yet here. But for now, let me come back where I can see my own face. I didn't stop the share. So let me do that. There we go. We're back. So for now, everybody, I hope you enjoyed that. I hope that gave you insight into how to evaluate this stuff and what to look at and when to look at it and how to evaluate timing. Listen, I can give you all the information in the world, right? But if you don't know how to structure that information for yourself to create your own investment portfolio rules, guidebook, call it what you will, based on the 3 platforms, investment management, risk management, and cash management, you are going to lose all day long. You will fall victim to your emotions. Your emotions will make all your mistakes for you. It really is that simple. Your emotions will make all mistakes for you. So, please, mentorship course. Here, I'm going to throw it up. My mentorship course. Email me, dmiller@prometheaninvesting.com. Go to prometheaninvesting.com and fill out the contact page, and I will happily get back to you. As you can see, I am not your average financial guy. What I will do is I will teach you. You will learn. You will understand how this system works. You will see why these things flow in a structured manner, and in such a structured manner that I can continuously put up accurate target dates, accurate target prices, and it is consistently correct. I am not a soothsayer. This is not a trick. This is a business that moves based on mechanics. Those mechanics create emotional responses. Those emotional responses dictate price and date targets. All right? I can't say that enough. I can't say that enough. It took me 25 years to get where I'm at, and I'd love to help you improve upon what you're doing. Some of you guys that have been trading for a really long time, there is no way my mentorship course or my one-on-ones don't benefit you. I don't care what you do and how you do it. There is no way it doesn't help you. There is no way what you're doing and allowing me to show you what I do, the system that I've created that is based on institutional and strong hands identifying what they're doing, and then simply realizing how retail is going to react to that. So are they buying, are they selling? Is this the top? Is this a bottom? Is this the Titanic or a correction or a small correction? How do you find target dates? How do you find target prices? And how do you do that accurately? All right, everybody, I'm going to zip it. That's my mentorship course starts in 2 days, by the way, and I only have 2 more open slots. So if you are interested, you need to reach out. If you are not following me on Twitter, please do. Derek Me 7526-3605. It has a blue check mark. It's me. It's a picture of me and my wife. Follow me. I'm on LinkedIn as Honest Trader. Again, here's my email, dmiller@prometheaninvesting.com. There it is. And remember, if you're not good up here, you're not good anywhere. All right. You got to keep this good. Get outside. See the sunshine. Go for a walk. You know, sometimes you have to fake it till you make it. Throw this smile on. Look like a dummy for an hour. It'll become real. Faking it till you make it. I remember when I started in business and I had to cold call, smiling and dialing, smiling and dialing. It changes your energy, everybody. Shift that energy. Do you know why? Because you haven't failed. Do you know how I know that? Because you are still here. All right, everyone. Remember, every day above ground's a good day.